This is the Financial News Network. I'm Christy Duffy. Search site Yahoo is scheduled to report fourth quarter 2010 financial results next Tuesday, January 25th. Looking ahead at what we can expect, Clayton Moran from the Benchmark Company joins us. Welcome, Clayton.
Thank you.
So what are your estimates looking ahead at Yahoo's fourth quarter 2010 financial statement?
Sure, we think the fourth quarter is going to be more of the same for Yahoo, meaning basically no growth on revenues, EBITDA that will benefit from improved cost savings, and EPS that will show the same benefit. But really it's the revenues which we're actually expecting to be down 3% year over year on a reported basis. That will be the most important metric reported by the company. And our expectation, I think, is pretty much in line with where the street is. So I don't expect the quarter to inspire any investors. I think it'll be sort of a non-event, really.
And it's widely known that Yahoo is trailing its peers in online advertising. What do you see as the main limiting factors that could really hamper Yahoo's results here?
Well, a few things are specific to this quarter. During the quarter, they were transitioning their search from their own technology over to Microsoft's Bing. While that went as planned, it had an indirect effect of discouraging advertisers who didn't want to deal with the uncertainty. So we think Google got an increase in its market share during the quarter for search, and Yahoo lost some share because of that uncertainty. In addition, on the display side of Yahoo's business, they're facing very tough comps. In the fourth quarter of last year, there was a lot of spending as the economy was beginning to recover. Advertisers were starting to feel better, and so the comparison in terms of year-over-year growth will be tough. So I think those two things are going to limit the fourth quarter specifically. From a larger perspective, obviously competition from new entrants, specifically Facebook, is really starting to hinder Yahoo's growth.
Well, it's a tougher market, and looking ahead at Yahoo, what kind of efforts can the company make, or do they need to make, to execute a turnaround?
Well, you know, there's been several different CEOs. It's been many years now where they've been trying to push for a turnaround, and they face a lot of secular headwinds. The portal strategy really doesn't work in an internet environment where specialization drives users. You know, Google specializes in search, YouTube and video, Facebook and social, and those are the winners. We think for Yahoo to really turn around their operations, they're going to need to be more specialized, more focused, create some, sort of winning websites in new areas, and potentially that means making some sizable acquisitions. Groupon or Twitter or something along those lines, where it's an emerging area of the internet that Yahoo could take a leadership position would be helpful.
So Yahoo not a winner for investors right now. Who else do you like in the space?
Well, we like Google as the leader in search advertising, but also gaining share in display advertising, mobile, and video. So Google looks very good here, trading at a very reasonable 19 times earnings. And in addition, the other leader, of course, is Amazon. We continue to have a buy rating there. And then a couple other smaller ideas would be GSI Commerce in the e-commerce space and ValueClick in the advertising space. And lastly, of course, the online travel agents look good here. Priceline's been a big winner. We think that'll continue to be a great stock. So those would be just a few of our buy-rated stocks that we'd like better than Yahoo.
All right. Thank you so much, Clayton.
Thank you.
All right. We'll be looking forward to those results next Tuesday. We were joined today by Clayton Moran of the Benchmark Company. For further earnings news and analysis, stay tuned to the Financial News Network. I'm Christy Duffy.